Now speaking, Devin Kaur, Head of Investor Relations. Good morning everyone and thank you for joining us for our first quarter 2023 earnings call. We are pleased to report that Mastercard had a strong start to the year, with total net revenue of $4.3 billion, up 11% on a currency-neutral basis. Our net income was $1.7 billion, up 17% on a currency-neutral basis. We also saw strong growth in our core products, with gross dollar volume up 13% and transactions up 10%. We are continuing to invest in our business, launching new products and services, and expanding our global reach. We are confident that these investments will drive long-term growth and value for our shareholders. We look forward to continuing to deliver strong results in the quarters ahead. Now speaking, Michael Miebach, Chief Executive Officer. And in financial services, we are working with banks to help them onboard customers faster and more securely. In conclusion, our second quarter results demonstrate the strength of our business fundamentals and our ability to capitalize on the recovery. We remain focused on our strategic priorities and are well positioned to capture the opportunities ahead. Thank you for your time. Our momentum continued into the second quarter with net revenue up 15% and operating income up 16%, both versus a year ago on a non-GAAP currency-neutral basis. Consumer spending has remained resilient with spend on experiences and travel remaining a focus. We continue to monitor a number of macroeconomic factors, including a strong labor market, wage growth, and consumer support from credit and savings. Domestic volume growth remains healthy, and cross-border travel is reaching 154% of 2019 levels in the second quarter. We are expanding in payments by winning deals with a diverse set of customers, powering growth and acceptance, capturing new payment flows, and exploring new ways to ensure payment choice. We have established exclusive partnerships with UniCredit, Deutsche Bank, Fiserv's Money Network, Coast Capital, Tim Hortons, Santander, Open Bank, Brex, MyPOS, Grow Finance, Standard Chartered Bank, Interchecks, Carempay, Alfarden Exchange, SAP, Coupa, Yep, Boost Payment Solutions, and Easy Transfer. We are also scaling our click-to-pay capability and introducing the Mastercard multi-token network. Our services are helping customers create stronger connections and greater loyalty, and we are leveraging our personalization and test and learn capabilities to help our partners enhance the customer experience. We are making progress in open banking and digital identity, partnering with Freddie Mac, Algoan, Dappy, Flight Hub, New Jersey Devils, Major League Baseball, IKEA, and banks to reduce friction and fraud. Now speaking, Sachin Mehra, Chief Financial Officer. Thank you, Michael. Our second quarter results demonstrate the strength of our business fundamentals and our ability to capitalize on the ongoing recovery of cross-border travel and resilient consumer spending. Net revenue was up 15%, operating income was up 16%, and EPS increased 14%. We also repurchased $2.4 billion worth of stock during the quarter. Our payment network net revenue increased 14%, driven by domestic and cross-border transaction and volume growth, and value-added services and solutions net revenue increased 16%. Worldwide gross dollar volume grew 12%, while cross-border volume increased 24% on a local currency basis. Switched transactions grew 17%, and other network assessments related to licensing, implementation, and other franchise fees were $270 million this quarter. For the full year 2023, we expect net revenue growth to remain in the low teens range on a currency-neutral basis, excluding acquisitions and special items. Operating expense growth is expected to be at the high end of a high single-digit rate on a currency-neutral basis, excluding acquisitions and special items. For the third quarter, we expect net revenue growth to be at a low double-digit rate on a currency-neutral basis, excluding acquisitions and special items. Operating expense growth is expected to be at the high end of a high single-digit rate versus a year ago on a currency-neutral basis, excluding acquisitions and special items. We are well positioned to capitalize on the continued recovery of cross-border travel and resilient consumer spending. J.P. Morgan Chase & Company analyst Tianjin Huang inquired, what factors drove the recent win of UniCredit and how does it reflect current trends in the banking industry? Michael Miebach replied, thanks for the question, Tianjin. We're thrilled to have won this unique pan-European bank contract, which covers 13 banks in 12 markets. Our digital capabilities and services were key factors in our success. We also discussed sustainability, as many customers are looking for ways to reduce consumption and emissions. Our commitment to sustainability was a major factor in UniCredit's decision. We have a proven track record of successful migrations, such as with Deutsche Bank and NatWest, so we're confident that we can deliver on day one. AllianceBernstein analyst Harshita Rawat inquired, what is your experience with FedNow and the potential risk it poses to the market? Michael Miebach replied, thanks, Harshita. FedNow is now live, a milestone that provides an opportunity to review the topic. Our view hasn't changed, merchants and consumers are looking for reach and safety, respectively. We have a strong brand and proposition, with contactless, tap on phone, buy now pay later, click to pay, etc. We will continue to compete and offer services to our banking and issuing partners. However, our solutions today provide more features than FedNow, such as Chase Pay by Bank. We have similar solutions in the UK and Europe, and we believe our solution is better. We'll stay close and see where it goes. Keefe, Brewett & Woods analyst Sanjay Sakrani inquired, what opportunities do you see with the new federal routing rules on debit card transactions? Michael Miebach replied, yes, Sanjay. We are prepared to compete in the networks available as of July 1st. We have taken the necessary steps to ensure we are ready and are looking for opportunities to do so. MoffettNathanson analyst Lisa Ellis inquired, Michael, how has Mastercard's ownership of infrastructure and fast ACH with VocaLink and Nets Corporate Services helped differentiate the company in terms of capturing account-to-account network payments over the last 6 to 7 years? Michael Miebach replied, thanks, Lisa. We invested in VocaLink to gain credibility and access to talent in the real-time payment space. Today, we have a presence in 13 of the top 50 GDP countries, running and partially operating real-time payment infrastructure. Our strategy is to focus on markets that matter, and build out applications and services on top of that infrastructure. We've already seen success with our anti-scam solution in the UK, which was a market-wide solution involving 9 banks. Going forward, we expect to continue to be in demand for our expertise in this space, and will have a seat at the table for government payment systems and other real-time payment solutions. Wolf Research analyst Darren Peller inquired, what were the strengths and weaknesses of value-added services this quarter, and how much room do you have to keep that growth alive? Michael Miebach replied, I'm confident that our payments and services strategy is the right one. We've seen strong growth in both areas, with services growing faster than the core. We've diversified our revenue base and pruned our processing strategy to focus on cybersecurity, which is driving demand. Our D&S and data analytics business is vertically integrated and provides test and learn, loyalty, and personalization services. We don't see any moderation in this area and will continue to build out across key aspects of services, cybersecurity, and data analytics insight. Sachin Mekra replied, good morning, Darren. In Q2, our value-added services and solutions grew 16%. This was impacted by a 1 part per trillion drop due to acquisitions. Cyber and intelligence and data and services growth rates were offset by other solutions such as real-time ACH, which tend to grow at a lower pace. For reference, services growth rate in Q2 was 18%. Credit Suisse analyst Timothy Chiodo inquired, could you provide more insight into the cross-border use cases for Mastercard Send that are driving volume and revenue growth? Michael Miebach replied, our Send business, both domestic and cross-border, is growing at a healthy pace. We have unparalleled reach in 100 countries around the world. To accelerate this business, we add new geographies, use cases, and corridors. We also make it easier for customers to onboard with our cross-border Service Express solution. Our assets, such as HomeSend integration, Transfast acquisition, Mastercard proprietary system, and Card Reach, make us experts in cross-border remittances and disbursements. UBS analyst Raina Kumar inquired, what trends are you seeing in B2B payments, and how is Mastercard progressing against capturing the TAM? Are you seeing any slowdown in corporate spending due to budget tightening? Michael Miebach replied, thank you, Raina. Our commercial business is growing at a healthy clip, with particular strength in our international markets. We're focusing on 2 main areas, commercial point of sale and B2B accounts payable. In commercial point of sale, we're leveraging our existing capabilities and complementary solutions to penetrate the massive TAM. On the B2B side, virtual cards are a great solution for automating invoice payments and digitizing processes. We're investing in product teams to make it better and recently launched Receivable Manager, a breakthrough that automates the acceptance of virtual card payments. This is one of our biggest growth opportunities and will remain a focus for us. Citi analyst Ashwin Shirvaikar inquired, what was the total revenue for the quarter? What is causing the increase in operating expenses from 3Q to 4Q, and what investments are you making that are most pertinent now? Sachin Mekra replied, good morning, Ashwin. Our operating expenses for the third quarter are in line with our expectations for the full year. We don't anticipate any unusual activity in the fourth quarter. We remain focused on driving our operating expenses in the areas that matter most to our strategic priorities. This includes investing in people, as they are essential to our tech development and sales efforts. We are confident that our investments in personnel will help us deliver the revenue we need. Michael Miebach replied, we are focused on top and bottom line growth, but we are also taking advantage of the current tailwind to invest in our business. We have seen success in our B2B and services sectors, and we will continue to nurture these areas with a disciplined and prudent approach. Mizuho Securities analyst Dan Dolev inquired, what was the rationale for not increasing guidance for the year given the strong second quarter results? Sachin Mekra replied, Dan, our guidance for the year is based on ranges that we have shared. We saw a beat in Q2 due to timing of deal activity, and we expect to remain active in the markets and compete vigorously. In Q1, we modestly increased our expectations from the start of the year. All of this taken together is the basis for our full-year guidance. William Blair & Company analyst Bob Napoli inquired, what progress has Mastercard made in open banking and how does it fit into other strategies such as embedded finance and banking as a service? Michael Miebach replied, open banking is a trend that is here to stay, and we are well positioned to take advantage of it. We have Finicity in the US and IA in Europe, which provide us with the necessary connectivity. We are now focusing on building use cases on top of this, such as our Chase Pay by Bank solution, which uses open banking data to tell billers when there is balance on an account. This is powered by Mastercard's open banking technology and was launched in the third quarter. Evercore IC analyst David Togut inquired, what growth rate in cross-border volume is embedded in your guidance for the second half of the year? What do you see in cross-border travel volumes by country in Europe? Sachin Mekra replied, sure, David. The value proposition of cross-border travel remains strong and we've used the pandemic to bolster our position in the market. Looking at year-over-year growth rates, slide 9 shows an accelerating trend in cross-border travel. In Q1, it was 148%, Q2 was 154%, and the first 3 weeks of July were 157%. Regional performance is good with diversified business models across multiple dimensions. Asia-Pacific is showing accelerating trends and there are still pockets of opportunity in China, with inbound travel at 50% of 2019 levels and outbound at 70%. We're well positioned for continued growth as we win more portfolios and leverage services like loyalty programs. Michael Miebach replied, the current market imbalance between demand and supply is an exciting opportunity for us. Our strong position in the travel industry with our portfolios, Expedia and Lufthansa, combined with the unlocking of capacity over time, will create a favorable environment for our business. We are well positioned to capitalize on this trend as people are eager to get out and explore. RBC Capital Markets analyst Dan Perlin inquired, what can you tell us about the downdraft in average tickets during the current quarter? Are you seeing any signs of trade downs from the consumer due to weaker spending? Sachin Mekra replied, Dan, inflation has moderated recently and in select international markets there is a slight moderation in consumer spending due to rising interest rates and high inflation levels. However, this is not broad-based and the consumer remains resilient. We have factored this into our guidance for the rest of the year and cross-border spending remains strong. Deutsche Bank analyst Brian Keane inquired, Sachin, how does FX volatility impact Mastercard's model? Sachin Mekra replied, Brian, FX volatility is reflected in our transaction processing assessments, not in cross-border assessments. The higher growth rate in cross-border assessments is due to a favorable mix of inter and intra-Europe volumes. Inter volumes are higher yielding than intra-Europe and that's why we saw the gap between revenues and volumes. Michael Miebach replied, thanks, Devin. I'm proud of the hard work and dedication of our 30,000 employees at Mastercard who make these results possible. I want to thank everyone for their support and questions today. We look forward to continuing this journey with Devin at the helm. Thank you and have a great day.